Good weekend, all. Ira Epstein, and here we are with your weekend edition of your Metal Market Wrap-Up, where we're going to cover the weekly charts. And this is for Friday, the 14th of July, 2023. I almost said 2013 there. I'm going to be out next week, but I intend on putting out updates, as many as I can. I can do it remotely. I just won't be in them. I won't be in the studio, so you won't have this nice face. My mother thought it was beautiful. Not many other people do. So where are we? Let's retrace just a moment. We had a jobs report over a week ago that was absolutely a good report in the sense that it didn't get anywhere near the ADP report. That's number one, nearly 500,000 jobs. It was 209 or something. We had a CPI, core CPI, come in and drop a half a percentage point. That's huge. We're not on the 4.8. We're nowhere near 2%. Please understand that. And I doubt you're going to go a half a point at a time on every single month. I think you can expect that that won't be the case. But it's a direction in the right way. And the PPI this week also very close to going deflationary. So it was an afterburner event for the stock market. Now, last night in my written updates to my clients, which you can get if you haven't tried them, go for free offers on our website at iraepstein.com. I said I expected today to be a correction day. I didn't know what the banks would do. I knew that today was the day that we're going to see bank earnings. As it turns out, one of the indexes was up, the others were down, so I was pretty much right. And the reason the Dow is up is there's only 30 stocks in there, and JP Morgan's one of them, and that was the big gainer that held the market up. Now, as you look through the banking, you also see State Street didn't do well. Three banks reported, the big boys, Citi, Wells Fargo, and JP. But once you got down to the lower tiers, you're not seeing the impact of the interest rates. JP Morgan was a blowout with it. The most money they ever earned, I think, on interest, period. And that just shows you that people got scared and they moved to the big boys and they didn't have to pay as much. It'll affect their earnings to a degree, but they took in so much money, it weighs itself out very beautifully, and that's why it went up. In the metal markets, you've come back into the 1960s. But if you've been watching me here, I've been saying the 1970, 73 area right in there is your resistance zone. It hasn't changed. In the copper, why is copper rallying? I think I figured it out. It has nothing to do with China because they've got nothing but problems. So it's not that. It's that the market has decided to go with the people, the naysayers, and say any recession you get is going to be short. It's not going to be as deep as people think. Too many people are still working. The job force is strong as can be, and away you go with that. And because of that, you will see that the industry is going to come back because people have enough money. That's the only thing I can figure. Trying to put my head around copper, what it'll do. I checked, there's not a squeeze play that I'm seeing at the LME exchange. We know that people play with what they're going to put in, deliverable, and so on. When we come over to the gold market, you can see where you're at. And is the Fed going to stop fighting inflation by not raising rates after the July hike? I still believe July 25th, there'll be a 25 basis point hike. I think it's cooked into the market, and then the market's going to say, we have a falling dollar, and I think the dollar's in a long-term bear trend that can go substantially lower. We're not going to have a Fed fighting us, and we still have a degree of inflation. Yes, the headwind of it is shrinking, but the core will take time to work off. Could the market make a challenge of these old highs? That's that blue line. It's possible, but in order to do it, you got to get back over the 1972 zone, the 18-week average. You haven't been able to show that you can do it. We're getting a bounce in the market after a big break. You've had the pattern down. You have to clear 1969.80 to break that trend. This week's high was 1968.50. And as you can see, you're fighting at that 18-week average. Now, when I put the Bollinger Bands on, they're going to fall. So this market, suddenly the volatility in this is starting to shrink. That's why the bands are wrapping their arms like that around it in these two parts. Momentum, oversold market. So oversold market, not yet in an uptrend, still in a downtrend. Got to take out 1969.80 in order to tell me that the downtrend is broken. And because it's oversold, it's not attracting new sell money. The gold-silver ratio cracked, and it's back into where you want to own silver over gold until you get back. In fact, you'd have to get back over that high to convince me that the play's not working that way. And unlike the gold, look at how this has come back and taken out that high. So what you did here is you fell in this market. You fell into the support as it was occurring. Remember, this is a weekly chart, and I was walking you through it as we were coming down. And I said, we're in a downtrend, lower highs, lower lows, but you now have to prove you can get through the 100 and the 200 week moving average of closes. Those are big numbers. If you bounce, the resistance should be the 18-week support here, and now you're very oversold. Oversold money often doesn't attract new selling. The market does a bit more covering, and all of a sudden you get the rally this week where now you have taken out that high. You're not in an uptrend. You're no longer in a downtrend. That's the important thing. In the copper market, you still have lower highs, lower lows. I've given you my analysis. I wouldn't be surprised if instead of clearing this high, you come back down and come back under that 18-week average and hang there for a little bit. This was the short cover. If you don't understand Bollinger Bands, if you were in front of me, I'd grab you and shake you. Take my Bollinger Band course. It teaches you how to work momentum and this together. My formula is different than the one you're using on your computer. That's why your numbers won't match mine. My charting software has it. I also make it available in TradingView. If you want to turn it on, if you're using TradingView instead of my QT or my LTP platforms, all you need to do is go to our website under Client Resources, click on TradingView, click it there, sign up. We'll get it turned on for you. Could it be any simpler? I don't think so. You'll have swing lines, outside days, window envelopes will appear. You have to put in my values for them, and all these moving averages. Your charts will look just like mine with that formula. So the resistance, you're beginning. It's from here up to the 18-week average. Because you're still oversold, I don't think you're going to attract new selling. In the dollar index, I want you to start thinking about 9,600. Certainly, you have to clear the 98, the 200-week average. And what I tell traders on the first move under a Bollinger Band, add to your shorts. Never. I think the big money pros took some money off this week, but I think they want to sell the rally. I am one of those guys with it. Now, you're hearing me talk Bollinger Bands, moving averages all the time. Learn them. I make it simple, 13 video chapters. With the course, you get to see my morning subscriber videos for both the Spider ETF and the futures. I teach you how to tie it all together. You'll have it down in no time at all. I had one client write me today. He's canceling one of my services. Why? I wrote him, I said, what don't you like? He said, it's not that I don't like it. He said, you've really taught me. I'm very comfortable doing this on my own right now. That's what I call success. I hate to lose him. He'll be back because you always need a refresher. But that's how it works. So how do you do this? Watch this. You'll be able to click at the top up here. That'll take you to our website at any point, by the way, and it'll take you right to the area where the education is and how you get this course. I'm Ira. You have a great weekend. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.